Welcome to the Net Wealth Nest podcast, the show that helps everyday people build real financial stability, starting from wherever you are. Whether you're working your way out of debt or just starting to save, we're here to help you grow your net wealth to your first big wealth milestone. Each episode, we break down the mindset shifts, practical tools, and real-life actions that can transform your financial future. Thanks for tuning in. Now let's get to work building your net wealth nest. Welcome to Net Wealth Nest Podcast. I'm your host, Jim LaBeouf, and thanks for joining us for another episode as we try to help you build financial stability. Today, we're going to talk a little bit about taxes and just give you some general information to help you understand taxes a little bit better and then maybe be able to do different things down the road to impact your taxes. Before we start with anything, here's a disclaimer. I am not a tax professional, and Net Wealth Nest is not providing tax advice for you to take. Any information that you take from here is purely for education and to help you get a basis on what things you can think about and research on your own. That being said, anytime you make any decisions that could impact your taxes, we highly recommend that you work with a certified professional like a CPA to ensure that you are making the right moves based on your specific circumstances. The things we talk about here, again, will be just about education and general knowledge, not advice that you should act upon without seeking out professional certified advice. So let's talk just a bit about taxes and why it can be confusing and sometimes overwhelming for some. The first thing we're going to talk about is the tax rate. And what most people understand is there is a tax rate that they qualify for based on how much they make. So to make math simple, let's say you made $20,000 over the course of a given year. Most people think, oh, that fits me in the 12% bracket, meaning I would pay 12% in taxes on that $20,000. That is an incorrect assumption, okay? What you will pay taxes on are brackets inside of that. So the first $12,000, so from 0 to $12,000, you will pay 10% tax on that. From $12,001 to $20,000, you will pay 12% on that. So it's not that you're paying 12% on all of it. You're actually paying a smaller portion when you start off and a bigger portion as your income grows up. And that's how each level of the tax bracket system works. When you get to the third bracket, which is 22%, you will pay 22% on anything about $49,000 all the way up to $103,000. Again, these are numbers using the 2025 tax code. They change every single year. And so you just need to understand that. But the system is progressive. So when you hear somebody say, oh, I'm in the 22% tax bracket, it doesn't mean that 22% of their money has gone to federal taxes. It just means that's where they ended up, and the highest amount of their dollars were paying some of that, but any lower were in the bottom brackets and they paid just that much on those specific dollar amounts. The second thing that a lot of people get confused about is what forms are important to them, what should they be looking out for, what am I asking maybe my employer for, these types of things. And so we'll cover just a couple that are important to you. So the first one is going to be a W-2. This is if you're an employee, you're making an hourly wage, you get a paycheck from somebody, they are going to qualify you as a W-2 employee, which means at the beginning of a new year, you will get a W-2 for the previous year about how much you made, how much taxes they took out, so on and so forth. There are also 1099 forms, and those are for contractors or people who are self-employed. So maybe you hired somebody to do some work on your house and you paid them. That person is a 1099 filer, and so they will file those types of forms that will show that they made income by providing services. The core of it is each of these end up telling the IRS how much money you made, so they have an idea of how much money that you would owe in taxes. The last one we'll talk about is the form that most people fill out, and that's the 1040. The 1040 is a tax form that kind of takes all of your information and puts it together and helps the IRS calculate how much you owe in taxes for a given year. Inside of that, some people talk a lot about deductions and credits. And there's some really standard and popular ones, like, for example, the child tax credit, where you get certain credits for children depending on how much you make. Or another one would be education credits. And some people even talk about deducting their mortgage interest or any other loan interest payments. These are all itemized or specific deductions that you can take against your taxes to lower what the government views the amount of money that you made, and therefore lowering the amount of taxes you owe. However, most people take what's called a standard deduction. And in 2025, that's $15,000. What that means is the government knows you're going to do some of these things, but many people don't do enough to get over that $15,000 hump. And that is for a single person. A married would be double that. But get over that either $15,000 or $30,000 hump where they would need to itemize every single deduction and credit. The government tries to simplify the form for you so you could just take the standard deduction. Even if you had less than $15,000 in deductions, you can still take the standard and lower your taxable income so you pay less taxes. Many people, as they do their taxes, are trying to figure out, what am I actually filling out? What do I need to tell the government? Is there something I'm missing? Is there a credit that I don't know if I do or do not qualify for? Do I have all the right documents I need to prove whatever I did, whether it be my W-2? If I am a 1099 employee, do I need bank interest statements, mortgage interest statements? Do I need receipts for any deductions? Or what about charitable contributions? There's a lot of questions all over the place. And this is where people will go back and forth on, is it worth my time and effort to hire a certified professional to do my taxes for me? As your wealth grows, I would typically say, yes, it is worth your time and effort to hire somebody who this is their job. This is what they do. They file tax returns for people, and they are going to know more about the tax code than you or your average person walking down the street, myself included. The reason that you want to hire them is they will be able to look at everything you can provide. They can ask questions. They can make assumptions based on the information you're giving you, and they can build out what your taxes will look like and make a decision, for example, of if you should take the standard deduction or if you should do an itemized deduction. All those things add up. Typically, the average person, depending on what they fill out, will spend anywhere between $20 and $70 on some sort of online or software program to do their taxes. Think things like Quicken or H&R Block offers your do-it-yourself tax documentation and services. A CPA, typically for the average person that doesn't have their own businesses or any of that, but just your W-2 employee, will typically charge somewhere between that $70 and sometimes up to about $150. And that's what I've typically seen on that. And in that case, it's worth it, especially as you start increasing assets, or where it starts to really become worth it is if you have a W-2 job and you're doing a side hustle, maybe you open your own business or doing that. As it becomes more complex, it's very much worth getting a certified professional to help you coordinate all the documentation, understand what credits are important to you, understand what you qualify for, what you do not, so you don't get audited by the IRS. All these things are well worth it so that you don't trigger any penalties and you don't trigger any audits. The next thing I'll talk about is, as a freelancer or gig worker, you sometimes will get income directly from the person you're working, and you'll need to account for how you're going to pay taxes for that throughout the course of the year. So let's say, for example, you do some local work where you are making digital logos for local companies, but they just find you locally because they know who you are, or they happen to bump into you and you say, do this. And they basically say, hey, I need this. Can you do this for me? They cut you a check, give you the check, and they move on. You are technically a 1099 employee, and you should be thinking about how much of that money is going to need to be set aside for taxes. It very much depends on what bracket you will fall in, and you can look up all that information, but you should be putting aside some of that money. Some professions also require that you file your income quarterly and pay those taxes as each quarter happens, or as every 3 months happens, so that you don't get behind and owe a very large tax bill. This is really popular in the realtor space, where realtors might sell a house or two and then might not have any income for a few months and then might have some more income, and their income is not necessarily consistent. But every quarter, many realtors will end up setting aside a chunk of cash that they made over that quarter and paying their taxes quarterly versus waiting to the end of the year. Very similar to what a W-2 employee does when they get their check. Their taxes are already taken out of there, and so they're basically saving a little bit of their paycheck every time they get paid to make sure that their tax bill is paid at the end. The last thing we'll talk about, and again, we'll refer to getting professionals to help you, but there are opportunities that you can take some tax advantages on different things you do. Really popular ones are going to be things like your 401k, an IRA, an HSA, or 529 plan. Now, if it sounds like I just chucked a lot of alphabet soup at you, that's okay. What you need to know is there are different retirement funds, there are different savings plans, there are different health funds, and there are even different funds for saving for your kids' college that you can contribute to as a savings plan and take that as a taxable advantage when you are doing that. Again, this is where we refer to having a certified professional help you understand what is tax advantaged and what might not be, and what works out for you and your personal financial situation. Hopefully that helps you a little bit understand how your taxes are taken out of your pay and allows you to step back and maybe ask a few questions, do some more research, and if it makes sense and you're in a financial position to do so, hire a certified professional to help you take advantage of any of those tax code savings that you might be missing out on. If you found this information useful, please don't keep us a secret. Like us, follow us, give us reviews on podcasts and YouTube. We're here to help you. We're here to grow financial stability in your life, and we want you to grow your net wealth nest. Again, I'm Jim. Thanks, everybody. Net Wealth Nest LLC and Podcast is an educational platform committed to providing resources and information to empower individuals on their financial journey. Please note, we do not provide financial, tax, or investment advice. All financial decisions should be made in consultation with a qualified professional who understands your unique circumstances. Seeking personalized advice is a smart and necessary step before making any major financial commitments. Thanks so much for joining us today. If you found value in this episode, please like and subscribe to our YouTube channel, Net Wealth Nest, and leave us a review on your favorite podcast platform. We read every comment, and they help us improve and guide what topics we dive into next. And hey, if something you heard today resonated with you, don't keep it to yourself. Share it with a friend, a family member, a coworker, your barber, your barista, even a stranger in line. You never know who might need this message. Remember, building net wealth is a journey, but you don't have to do it alone. Stick with us, and together, let's grow your net wealth nest.